Simplicity does not precede complexity, but follows it. Alan Perlis. My friends, we have made everything as simple as possible. We've taken this complex marketplace and we've broken it down to a few simple things. The main indicator is the price percent oscillator, which we look to give us weekly vertical crossovers accurately. And in fact, that is the half day. This is the weekly vertical crossovers. Those half days can be helpful also, but particularly the 2-day recrosses where we see a pullback in the opposite direction of the weekly and then the 2-day cross back over in the direction of the weekly. That's what we call a 2-day recross. Those can also be helpful. The reason that we use the 4 charts we use, the S&P 500, the Nasdaq 100, 20-year bonds, and gold, is because these are chartable ETFs. Your favorite stock, your favorite ETFs, you need to backtrack those. I'm going to put backtracking at the end of today's video so you understand what I'm talking about. That's going back in time and historically tracking the crossovers to see how accurate they are. There are some stocks and ETFs that just aren't trackable. There are others that are eminently trackable. There's some that just don't move enough. You have to have movement and you have to have trackability. Also liquidity. And again, we also like optionability when we start getting a little more complicated, and we like inverse funds. And of course, all 4 of our ETFs that we track offer all of those. That's why we use them for you to practice with us every day. Now let's jump into these charts. What do we see going on? Well, we see the S&P down a little bit for the day, 0.17%. And as we look at the S&P on the weekly chart, we'll start there first. We see as the weekly chart is progressing, we have an up candle reaching a higher high so far for the week. The price percent oscillator's flat, derivative oscillator's actually losing a little momentum. Go to the 2-day chart. Of course, it is still negative. Now again, we're waiting to see if indeed this 2-day is going to cross back over and give us an opportunity to have a recross, or if there's going to be enough downward pressure that in fact the 2-day may cross over going down. We're just going to have to wait and see. Right now, it is still negative. The price percent oscillator's flat. The derivative oscillator's gaining a little downward momentum. We go to the half-day chart. What do we see there? It's positive up in the morning, and then that pullback occurred in the afternoon with price above the 2-day trend line and just above the weekly. So that's where we are. We're in limbo when it comes to the S&P. Why? Because that 2-day has crossed over going down and the weekly is up. Remember, we're not in a trade when the weekly and the 2-day are converse to each other. Now let's go to the Qs. That's the Nasdaq 100, the tech stocks. It was up for the day just a little bit, 0.09%. What do we see going on there? Well, we see the Qs moving up to a higher high for the week. Again, a nice looking candle 2 days in to this candle. We see that that price percent oscillator is just over the red signal line. We can just see that physically on the charts, and then on the left-hand side of the page, when we look below that horizontal gray line, PPO and exponential moving average, we can see that it is higher, just a little bit higher. Derivative oscillator gaining upward momentum. Now we go to the 2-day chart. And of course, that 2-day candle representing Monday and Tuesday has finished drawing, and we see it reaching a higher high. And again, looks like it's ever so slightly pulling away from the red signal line. And we see the derivative oscillator gaining a little bit of momentum. What do we see on the half-day chart? Well, of course, it crossed over going up back on the afternoon on Monday, and then peaked in the morning on Tuesday, and then lost a little bit in the afternoon. So we'll continue to watch. That Q's trade is still looking good. Now we leave stocks, we go to bonds. Bonds are down for the day just a little bit, 0.13%. Now as we look at the red candles, we do have a solid green candle, and that's a slowdown in the down movement after that week where things really peaked going down. So that most recently. And what have we seen happen? Well, we haven't reached that low yet over these last 3 or so weeks. So what are we watching for? Well, we see that the price percent oscillator is flat. The derivative oscillator is losing downward momentum. And we see prices just below that weekly trend line. We do have a red down candle forming, but again, it's not reaching a lower low at this point. We go from the weekly to the 2-day. What do we see there? Well, that 2-day candle bounced off the red signal line. It's been positive for a while since it crossed over going up back on the 11th of December. After that, it rolled down it's just really been sliding sideways going on several weeks now. Price percent oscillator slowly pulling away from the red signal line, trying to go up. But again, since the weekly's down and the 2-day is up, we just don't have a trade on TLT. Let's see what's happening as we dig a little deeper in that half-day chart. We can see where things were a little bit questionable in the morning, pretty much have a red spinning top, and then gained a little bit in the afternoon, or tried to gain a little bit in the afternoon, or Heikin-Ashi candlesticks, but overall down for the day 0.13%. And besides the backtracking training, so you understand how to read these Heikin-Ashi candlesticks, I'm going to put that training at the end of today's video too. Of all of our trainings, it is the one that's had the most views. Maybe a couple of 100,000 people have taken that training. We'll put that at the end of today's video for you also, so you understand how we use. It's not your typical high, open, low, close. Heikin-Ashi candlesticks are calculated differently, and what makes them so handy, I understand Heikin-Ashi in Japanese means average pace, and that's what they help you see, the average pace of price movement. You couple that with your price percent oscillator and your derivative oscillator and all 3 of the time frames, and along with the trend lines and the Bollinger Bands. That's everything we use. Putting all that together in one big amalgam of knowledge, that's what gives you the feel that we are training for. That's what we are truly all about. Okay, and you're only going to get that 10 to 15 minutes a day. Every day the market is open, filling out that trade worksheet, daily market worksheet, once a week, the weekly market worksheet. That's what's going to cue you in as to how this really works and help you with the nuanced learning that you need. Lastly, we go to gold. What do we see on gold? Gold up for the day 0.35%. And it's nice to see gold continuing to move up nicely on that weekly chart. But look at the price percent oscillator. Still just flat. Derivative oscillator losing momentum. Price percent oscillator is going to need some more to get it moving to cross over. So we'll continue to keep an eye on things there. We again are still negative, and we'll just watch, wait, and see. Look at the 2-day chart. It is heading up. We again are reaching higher highs as we continue to move up that trend line. Let's make sure we get that as accurate as we can. How many candles can we connect? Really only can connect 2. Not as valuable as when you can connect 3 or more. Again, just shows you a more solid trend. But we see the price percent oscillator losing a little bit of momentum. Price percent oscillator. No, it's heading up about the same. Derivative oscillators continuing to lose a little bit of momentum. So we'll keep our eye on things, see how gold continues to progress. I am hoping that 2-day chart is going to keep moving up and rotate over that weekly trend line and give us an opportunity to jump in. But look at gold when it comes to the half day. It's been negative for a while since it crossed over going down back on the afternoon of Tuesday, the 22nd of December. Even with 2.5 days of up moves, just not enough to have it cross over. And it's just flat right now in the negative position. And again, gold up a little bit for the day. Our biggest gainer, 0.35%. So we'll continue to keep the powder dry. Wait for gold to give us a clear signal as to whether it's going up or down. I'm hoping it's going to take off and buzz up in the future. Hey, another chart you might want to keep an eye on is the silver chart. Again, the weekly chart on silver going into the 4th week of up movement on silver, getting closer and closer to a weekly vertical crossover going up. And you look at our silver chart, it's a pretty darn good chart. Remember how we tracked that a while for you? So keep an eye on that. SLV, just a little note of something you might want to look at and potentially practice trade. Folks, that's where we are as we end the day. We have a great training for all of our subscribers. It is in your show notes. Finding your own aha moment. Oh, those are so sweet. And again, to be a subscriber, you just go to chartingwealth.com, sign up for free. It's free. Go there, put in your name, email address. That list is never spammed. It's never shared. And again, that's at chartingwealth.com. You don't have our book. You need it. Just follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.